The mythology is investing is hedge fund manager George Soros spots the opportunity, gets in at the right price, makes a fortune. The reality is most people have no idea where the price is going over a short term. So what happens is you buy something, you put all your money in, you've saved up your $5,000, you put it all into Bitcoin. Bitcoin falls 50%, you panic, you sell it, you feel terrible. Bitcoin goes back up again. You feel even worse now. You can scrape together, you've lost, half of your money now, and then you keep compounding these errors, right? It's called market timing, and market timing is extraordinarily difficult. I do some market timing because that's been my job. And 30 years, I've done more than my 10,000 hours, a lot more than my 10,000 hours. And that doesn't make me very good at it either. I'm not bad at it in long-term investing. I'm terrible at short-term. So what is dollar cost averaging? Dollar cost averaging is basically what everybody does with their 401k. The problem is with 401ks or retirement funds is nobody cares about them. You don't know what's in it. You have no ownership. You just put some of your salary away and it goes in this mythical thing that you probably assume won't be worth as much money as you hope it is. That's what that's become. And you put it in every month. Why do you do that? Well, because you're averaging all of the highs and lows over time, because markets tend to do this. So you're kind of indifferent. In fact, you love it when it falls because you're buying more units at a lower price, because your game is to own as much as you can at the lowest possible price. But if you don't know how to market time, and 99.9% of people don't and can't and shouldn't, then you just average in over time and magic will happen. You just average a beautiful price over time. And had you done that in the S&P or anything else, you'd make money. Now, what's so lovely about Bitcoin is it's not a passive investment like your retirement fund, because a retirement fund you can't access until later. So you kind of write it off, and everybody's heard that it's never going to be worth as much as it should be anyway. So it's become a bit of a pain as opposed to something. But this you own, you live and breathe that volatility, and you live and breathe those gains when they happen. And you will be like wide-eyed. I did it to my sister-in-law, forced her to do this. I said, listen, I'm going to make it easy for you. Just go and open a PayPal account and start that way. And she had some savings. She could take out of another thing. She had like $5,000, $10,000, and she put it in, and we got the timing relatively right. So it shot up a lot. I think she got in about 13,000 in Bitcoin.
Whoa.
And it shot 17,000. Yeah. And it shot up a lot. So she's like, wow. And then it falls a lot. And she's calling me up saying, what do I do? Should I sell some? I'm like, no, you keep putting in part of your paycheck. And after all of these falls, these several falls, she starts to really understand. And when they start falling a lot, she starts doubling the amount that she would have normally invested. And now she's taught herself to invest. Next thing I hear, oh, well, I bought some Ethereum, and this is how I'm dealing with that. So she's now looking at two different things, and she's now thinking about the asset allocation. What's going to outperform Ethereum with Bitcoin? She knew nothing about this stuff. This is a year and a half, and she now understands because of that dollar cost averaging and taking ownership that you, exactly as you said, once you actually own something, that 401k, you don't actually really own. It's like some other guy does something with it and hopefully he makes money. This is you. You're taking responsibility for your own finances. That's so empowering. Now faced with something that really offers people enormous opportunity. You're talking a 10 for 1. I think the space over the whole space over the next 10, 12 years is probably 100x, right? That's a whole asset class. We've never seen that in history in that space of time. But humans are humans. We go back to that fundamental flaw is we love leverage.
Tell people what leverage is for the
leverage
few people
is when you borrow
understand.
money to buy something. So let's say you had borrowed to buy the original Bitcoin purchases, and let's say you put down half of the money. So basically at 27,000 or 26,000, you've lost all your money. Now, Bitcoin hit that. You'd have been wiped out. And you'd have had to pay somebody and you'll have been liquidated. And then Bitcoin goes back up in price and you'll have missed it all. That's what leverage does, because it's okay in a house because house prices aren't very volatile. So occasionally, once in a generation, you get a 2008 thing where the house prices start moving a lot, and suddenly the people's equity in their house wasn't enough, and everybody gets liquidated, i.e., the bank says, we want our money back. That's okay to take that risk if you're cautious in housing. In crypto, this thing moves around like this. Its predictability in the short term is extremely low, unlike housing predictability. So just don't borrow money to do this. If I can get that across, then you don't care if it falls to 26,000 or 10,000, because you can buy more units at the lower price over time, and you don't care. And then when it's trading at 500,000, you'll have become extremely wealthy. It's as simple as that. Don't overcomplicate it. Don't think about derivatives, futures, options, none of it. Just stick with this simple plan. Don't use leverage, dollar cost average. Think about it as a 5 to 10 year investment, and your probability of success is going to be extremely high. I've become pretty public in all of this space, and I've got a very clear idea of where I think it's going and how it's going to go. So I have my thesis. And when everything starts falling apart, like the market starts moving, I look like, how has it moved in the past? And it's done similar things, right? And I've been telling everybody who's ever got into the space, you need to expect a 50% correction in a bull market, and you might see a 70% bear market. And over 5 years, you'll have still made more money than you could imagine. So you have to accept those things. So this thing starts tanking. Bitcoin starts first, then Ethereum rolls over later, and it's all down 50%. And I said, I've got this weight on my shoulders. I've got all of these people that have been following me. I have been telling them this, but it messes with your mind. And I pick out the one chart that matters to me, which is the adoption chart. Is anything that's going on with China and mining and this and that changing the adoption curve or not? No. So then, as you said, the relentless rise of technology continues. So la, 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 I can't hear it. So I turn around to my wife and I'm like, it's fallen 50%. Everybody's freaking out. And she just looked at me and goes, you are all so ridiculous. She said, you said you should expect this. Now it's happening. Everybody's freaking out. And she just walked off and said, she just said, don't be so stupid, and walked out of the room. And I'm like, yeah, just, Twitter is sometimes, or Reddit, or whatever forum you're on, is sometimes your enemy. And sometimes you just need to turn that off. Now, it's been the same with investing in Amazon. Right? The reason Bezos is so wealthy is because he was probably one of the only people in the world who had Amazon shares from the beginning and never sold them, because it went down 95%.
Oh,
in 2001 too. It's had several 60% falls, and it still made him the richest man in the world. This is what exponentiality looks like. And for people who are a little more savvy, there's a magic trick to everything to keep your sanity in this, because this stuff goes like this, and then it does this, and you'll see there's like free charting almost on every platform now, TradingView, something like that. Just change the scale to a logarithmic scale. And what you'll find is, like, you look at Facebook, it goes like this. You look at Amazon, it goes like this, right? And it always feels like, I can't buy this. This gone up too much. That fear that you had at 52,000, right? But that's real. You change it to a log chart, and it's a beautiful trend. And you realize it's all noise. And yes, those movements can be 50%, 60%, but it's just moving in that lovely little trend. Facebook has done that since 2012, never deviated. Nor has Apple, nor has Microsoft, nor has Google. None of these have. Not even Tesla. And nor has Bitcoin, and nor has Ethereum. They're all network effects, and they're priced in the same way. They're all exponential in nature, which we can't get our heads around until you put it on a log chart, and it makes you calm down.
what does the log chart do? I've heard the phrase, but I honestly don't know what that means.
The scale. So normally a scale would go like a Bitcoin chart. Well, because it starts really low, it might start at $10, And then it's got to go up to $65,000. So suddenly you're seeing a move, $1,000 move. It looks small, but before it was big. So what happens is it squashes the chart, because most of the price action has happened from, let's say, $10,000 to 65,000. So you keep getting this, looks like this all the time.
And so this is just by stretching out the timeline?
No. So what a log chart does is change the scale where it doubles every measure. So it goes $10, $100, or it goes 10x, let's say, $10, $100, $1,000, $1 million. What that little trick does is smooth out all of this issue. So you'll get comfortable when you look at it, just to realize that, and look at the scale, look how it's changed versus the other scale. And you'll see from that, it basically compresses all of this. It's the same as if you used percentages, because, you know, a 5,000 point move now in Bitcoin is not the same as a 5,000 point move when it was at 5,000. It would have been 100%. And now it's not. Now it's like whatever it is today, 10%. So it's changing that. And that really helps. But if you want to invest in a group of startups or a single startup, it's deemed too risky by somebody. And a lot of that is a power grab by Wall Street. Because what does that mean? It means you can't do it. You have to give it to somebody else. And they can pull the money. So then you're not taking specific risks. And what that means is somebody on Wall Street gets rich on your behalf, because you're now paying them fees that you didn't have to pay. That's the beauty of Bitcoin. You're basically a VC investor in the future of money, not Bitcoin, Ethereum, even better. You're a VC investor in the future platform of the internet of value, and you're paying nobody any fees.
Dude, let that sink in. Like that's, yeah, it's really crazy. And man,
And I just really hope.
Go ahead.
There's no bank saying, well, you have to do it through us if you want to do this. You can buy it and store it on a hard wallet, and there's nobody involved. That is the power of what is happening here. This is true kind of distributed power within wealth creation that people only dream of. This is the system not being against you, but working for you for once.